In this video, I'm going to show you guys exactly why your entries are not working and also the correct smart money concept entry schematic that you guys should be using when entering trades. Okay, so starting things off here, the first thing to note is we need to identify, number one, our higher time frame break of structure. Okay, so how do we identify this? So if we have a push to the upside, followed by a pullback, followed by a strong push to the upside, we've broke structure to the upside here, and therefore this is our higher time frame break of structure. We can mark that on by a BOS, a boss to the upside. We've broke structure to the upside. Therefore, we're looking for a long bias. Okay, we can then go ahead and mark on our guarded low. And what is our guarded low? It's the most recent lower high before we make the higher high. So let's mark this on as a GL. And what I mean by that is here, so we have a high, we have a pullback, we have a higher low in the market, we then make a higher high in the market. So once we've seen this higher high, we want to see a pullback, and then we're going to be looking for the entry schematic within a certain area, and then we can look for a long trade. Okay, so we've seen the higher high, we then want to see a pullback into our point of interest, number 2 here. So point of interest, what is that? That's our most recent extreme supply. Okay, and our extreme supply is an order block before the move to the upside. So that is the last down candle before this push to the upside. Okay, so we mark on our last down candle here from the open to the low, our last down candle, and this is our point of interest here. This is where we're going to be looking for our long trades. Okay, we want to see a pullback into our point of interest. So price comes into our point of interest, we would then want to see a lower high followed by a lower low. Okay, this is what we call a run on liquidity. Okay, so we can mark that on, our run on liquidity. Run on liquidity here. We then want to see a shift to the upside. So this is number 3, a lower time frame shift. Okay, so when you drop down to the lower time frame, you're going to see the lower high, lower low, and then we want to see a strong shift out of our extreme supply, out of our point of interest. Once you see the strong shift, this is a break of structure here. We can mark that on. Okay, so we've had a lower time frame break of structure. We then have a new lower time frame guarded low. We can mark that on as well. Mark that on here. So once we've seen the lower time frame shift, we then want to see simply a pullback to 50% of the last down leg on the lower time frame. So 50% of this down move here. So we can just draw a fib from the high to the low here. That gives us our 50%, and that's where we're going to be looking at taking an entry. Okay, so we set a pending order here. Stop loss below our guarded low. Give it a little bit of room to breathe. Targets, let's look at targets. Okay, so we're going to be targeting the liquidity, the upside liquidity, and that's going to be equal highs here. So liquidity, we're going to be targeting up here as reaching for all this liquidity to the upside. Okay, we're going to look for more continuation, but that's going to be our first target. That's going to be TP1. Okay, so we've seen the shift of structure. We then want to see a correction back into 50% of that down leg. We get triggered into our trade. We're then going to look to ride that trend up to equal highs here, up to equal highs, and then also more continuation to the upside. Okay, so just to summarize our entry schematic here, number 1 is our higher time frame break of structure. That's this here. So we broke structure here to the upside. That's our higher time frame break of structure. Number 2 is our point of interest. Number 2, That's this area here, our extreme supply, and this will be our order block. And then number 3 is our lower time frame shift. That's this here, lower time frame shift. And then we can look to enter on 50% of that down move there. Stop below guarded low, target TP1, the first upside liquidity, which will be the equal high, and then for some more further continuation reaching for this upside liquidity here. Okay, so that's our smart money concept entry schematic. I hope you guys liked this video, and I'll see you guys in the next one. Take care.